What's happening, crypto crew? Get ready, because the news cycle is absolutely exploding, and we've got the intel you need to stay ahead of the curve. The market is moving at warp speed, and if you're not plugged in, you're missing out on massive moves. Today, we're diving deep into some of the most talked about developments. You do not want to miss this. Stick around, because you're about to get the unmissable updates that matter most. Let's get into it. First up, as Bitcoin sees some fluctuations, a unique tokenized mining model is capturing the attention of major investors, offering a new way to earn Bitcoin rewards without direct ownership. We'll break down exactly how this works and why whales are diving in. Then, we're dissecting Bitcoin's latest technical signal, the Golden Cross, and what it could mean for the future price action. Is it a genuine bull market indicator or a potential trap? We've got the expert analysis. Next, we're heading to El Salvador, where a controversial move to protect its Bitcoin holdings has the internet buzzing and cracking jokes. We'll explore the details and the reactions. And finally, we're looking at a major player with ties to a prominent family, making a significant bet on Bitcoin's future. We'll cover their massive investment strategy and what it could mean for the market. You know the drill. Hit that like button, subscribe if you haven't already, and ring that notification bell so you never miss a beat. This is Bitcoin Bulletin, and we're going live. A new way to mine Bitcoin. Investors flock to tokenized mining as BTC dips. As Bitcoin experiences a dip below the significant $110,000 mark, a novel investment strategy is capturing the attention of major players in the crypto space, particularly Solana whales and other large-scale investors. Bitfrac's Stage 2 presale for its tokenized mining model, BFT stake, is gaining considerable momentum, offering a unique pathway for individuals to gain exposure to Bitcoin earnings without the complexities of direct Bitcoin ownership or the management of mining hardware. This innovative approach is positioning itself as a compelling alternative in a fluctuating market, drawing in capital and interest from those looking for passive income streams. The core of Bitfrac's offering lies in its tokenized mining concept. Instead of purchasing Bitcoin directly or setting up their own mining rigs, investors acquire BFT tokens. These tokens represent a stake in Bitfrac's industrial-scale mining infrastructure. Through smart contracts, the Bitcoin rewards generated by this operation are then distributed directly to BFT token holders. This model effectively democratizes access to Bitcoin mining, removing the technical barriers and high capital expenditure typically associated with it. It allows participants to benefit from the mining process, receiving their share of BTC earnings on a regular basis, managed entirely by the platform. The current presale has seen remarkable uptake, with over 2,000 investors already participating and contributing $4 million to the project. The BFT tokens are currently priced at an attractive 0.024 each, but this introductory price is time-limited. Bitfrac has indicated that the availability is scarce, and an increase in price is anticipated as the presale progresses through its stages. This creates an urgency for potential investors to get in early to secure tokens at the most favorable rates, and to start benefiting from the monthly Bitcoin distributions as soon as possible. Analysts are pointing to Bitfrac's robust, industrial-scale mining operations as a key differentiator. They highlight the transparency and efficiency of the model, particularly its ability to provide a stable, passive income alternative during periods of market volatility. The infrastructure is managed by a dedicated team focused on optimizing output and energy efficiency, ensuring continuous operation. This focus on real-world assets and operational efficiency aims to build trust and provide tangible value, setting it apart from more speculative ventures often seen in the crypto presale market. The automated distribution of rewards via smart contracts further enhances the appeal, offering a seamless and reliable way for investors to receive their earnings. As the broader crypto market navigates its inherent volatility, strategies that offer diversified income streams and mitigate direct risk are becoming increasingly sought after. Bitfrac's tokenized mining model appears to align perfectly with this trend, providing a bridge between traditional mining concepts and the accessibility of blockchain technology. It offers a clear value proposition for those looking to benefit from Bitcoin's potential, without the direct exposure to its price swings or the operational headaches of mining. But is this the only way investors are adapting to Bitcoin's moves? Get ready, because we're about to explore a technical signal that could predict Bitcoin's next massive price surge. Bitcoin's golden cross, bull market signal or bear trap. The cryptocurrency market is abuzz with the reappearance of Bitcoin's golden cross on its weekly chart, a technical pattern that has historically preceded significant price rallies. This event, where the 50-week moving average crosses above the 200-week moving average, is often interpreted as a strong bullish indicator. Looking back at previous instances in 2015, 2016, and 2019, golden crosses were followed by remarkable price surges, with gains ranging from 264% to an astonishing 2,200%. The current occurrence in 2025, with Bitcoin trading around the $109,500 mark, has reignited optimism and speculation about a potential parabolic ascent. Market sentiment appears to be leaning bullish, with analysts like Gordon pointing out that altcoins are currently at their most oversold levels in history, suggesting a strong potential for a widespread recovery. He expresses confidence that both Bitcoin and its associated altcoins are poised for a significant bounce. Technical analysts are closely watching key price levels, with $110,100 identified as a critical resistance point. A sustained move above this level could potentially propel Bitcoin towards a target of $112,500, according to analysts like Leonard Snyder. The market has experienced a period of relative calm and low volatility since July, leading many to believe that a substantial shift in price action could be imminent. Fundamental factors further bolster the bullish outlook. Institutional adoption of Bitcoin is accelerating, evidenced by the substantial assets held by U.S. spot Bitcoin ETFs. BlackRock's IBIT, for example, has amassed over $57 billion. Projections suggest that ETF holdings could account for as much as 7% of Bitcoin's total circulating supply by the end of 2025, underscoring a growing confidence from institutional investors. Compounding this is the impact of the April 2024 Bitcoin halving event, which reduced the supply of newly minted Bitcoins. This reduction in supply, coupled with increasing institutional demand, has led some prominent analysts to forecast ambitious price targets, with some predicting Bitcoin could reach $200,000 by the close of the year. Regulatory advancements are also playing a crucial role in reducing market uncertainty. The U.S. government's initiatives to integrate Bitcoin into retirement plans and the SEC's Project Crypto, aimed at modernizing securities regulations to accommodate digital assets, are fostering a more favorable environment for traditional financial institutions. This evolving regulatory landscape is positioning Bitcoin not just as a digital store of value, but as an integral part of a broadening financial ecosystem, finding its way into yield-generating products and corporate treasuries. However, not all analysts are convinced that the Golden Cross guarantees an upward trajectory. Skeptics highlight potential macroeconomic headwinds, such as the Federal Reserve's delayed interest rate cuts and ongoing geopolitical tensions, which could disrupt Bitcoin's momentum. Historical market behavior also suggests that corrections can follow significant rallies, meaning volatility remains a persistent risk. Analysts like Charting Guy caution that failure to maintain support at the $95,000 level could lead to a prolonged bearish phase. As Bitcoin hovers near these critical support levels, the upcoming weeks will be pivotal in determining whether the Golden Cross truly signals the start of a sustained bull run or if bearish pressures will ultimately prevail. While the charts paint a potentially bright picture, some countries are taking unusual steps to protect their digital assets. Get ready, because we're diving into a story that's got the internet laughing out loud. El Salvador's quantum-safe Bitcoin. Internet scoffs at nation's crypto strategy. Reports circulating the internet have sparked widespread amusement and skepticism regarding El Salvador's recent announcement about its Bitcoin holdings. The nation, which famously adopted Bitcoin as legal tender, has reportedly distributed its BTC reserves across 14 different blockchain addresses. The stated purpose behind this move, according to the country's Bitcoin office managed by Max Kaiser's wife, Stacey Herbert, is to safeguard these assets against potential future threats from quantum computing. However, this explanation has been met with derision rather than admiration across social media platforms. Prominent influencers and commentators have been quick to voice their disbelief. Influencer Jacob King, for instance, vehemently suggested that El Salvador's announcement was a thinly veiled attempt to prepare for selling their Bitcoin holdings, dismissing the quantum computing argument as laughable and a terrible lie. His strong reaction was further amplified when Alex Thorne of Galaxy Digital weighed in, expressing disagreement with the notion that splitting holdings into multiple wallets and ceasing address reuse would offer any meaningful protection against quantum attacks. The ensuing online debate took a humorous turn when King deleted a post that had claimed one of El Salvador's new addresses was not quantum-resistant, and then proceeded to block Thorne out of spite, making King's initial claims appear even more unfounded and comical. Thorne elaborated on the technical nuances, noting that while certain types of wallet configurations might be more susceptible to quantum computing threats than others, particularly addresses that are frequently reused or those using older payment formats like P2PK. The general strategy of distributing holdings is unlikely to provide robust defense against a true quantum breakthrough. The community, often referred to as the WASI community, has largely cataloged the entire incident as a particularly amusing episode in the ongoing narrative of national Bitcoin adoption. The core issue lies in the practical implications of quantum computing on current cryptography. If a quantum computer were to achieve the capability to break SHA-256 encryption, the underlying security mechanism for Bitcoin, the impact would be catastrophic. However, Bitcoin wallets would likely represent a minuscule fraction of the trillions of dollars in data and financial systems that would be targeted. The perceived threat to individual Bitcoin addresses from quantum computing, at this stage, is seen as vastly overstated by many experts. Furthermore, experts suggest that there can be many legitimate reasons for moving cryptocurrency holdings between addresses. These can include migrating assets to new hardware wallets for enhanced security, consolidating assets into cold storage for safekeeping, or upgrading to multi-signature wallet setups for improved control and protection. Attributing such operational movements solely to an unproven quantum computing threat is viewed as a misinterpretation, or, as some suggest, a misleading narrative. In essence, while El Salvador's move might technically offer marginal benefits against very specific, hypothetical quantum computing scenarios, the overall effectiveness in warding off a genuine quantum breakthrough is considered highly improbable. The Internet's reaction underscores a broader sentiment that the country's explanation lacks technical credibility and may be masking other strategic intentions. From national strategies to individual enterprise, the crypto world is seeing big bets placed on Bitcoin's future. Get ready, because we're talking about a major player with ties to a prominent family making a significant investment. Trump-backed Metaplanet bets big on Bitcoin's future, seeks $884 in equity offering. Metaplanet, a Japanese company that has strategically shifted its focus to becoming a Bitcoin treasury, has announced a significant capital-raising initiative. With the backing of Eric Trump, the company is looking to secure up to 130.3 billion yen, approximately $884.41 million USD, through an overseas equity offering. The primary objective of this substantial fundraising effort is to further increase its holdings of Bitcoin. This move signals a strong conviction in Bitcoin's long-term potential, even amidst current market fluctuations, and highlights the growing influence of prominent figures in the cryptocurrency space. The company's transformation began in April 2024, when its founder and CEO, Simon Jurovich, divested a significant portion of the firm's hotel assets. This strategic pivot was heavily inspired by the success of companies like MicroStrategy, which have aggressively accumulated Bitcoin as a corporate treasury asset. Metaplanet has since dedicated its resources to acquiring Bitcoin, aiming to establish itself as a prominent Bitcoin-centric entity. As of September 1st, the firm's Bitcoin holdings had expanded to an impressive 20,000 BTC. Metaplanet recently bolstered its reserves by purchasing an additional 1,009 BTC at an average price of 16.33 million yen per coin, roughly equivalent to $111,000 USD. This acquisition alone amounted to approximately 16.48 billion yen, or $112 million USD. Considering the current market price of Bitcoin, which is around $107,407, this recent purchase is valued at approximately $108.6 million. These strategic acquisitions have brought Metaplanet's total Bitcoin holdings to an estimated 302.3 billion yen, or about $2.14 billion USD. The company has managed to achieve this with an average purchase price of approximately 15.1 million yen per Bitcoin, translating to about $102,800 USD. To measure the success and potential value of its Bitcoin strategy, Metaplanet tracks an internal metric called BTC yield. For the quarter ending September 1st, this yield was reported at 30.7%. This metric is used to assess the value of Bitcoin holdings relative to the company's fully diluted shares. Earlier in the year, this figure had reached as high as 309.8%, indicating a highly aggressive acquisition strategy designed to maximize shareholder value through Bitcoin accumulation. The involvement of the Trump family, particularly Eric Trump's appointment as an advisor in March, has significantly amplified Metaplanet's visibility. The company is leveraging this connection to foster global Bitcoin adoption, as evidenced by Eric Trump's participation alongside CEO Jurovich at a recent shareholder meeting in Tokyo. This strategic alignment with the Trump family's broader interest in the digital asset space, including ventures into stablecoins and mining operations, positions Metaplanet for potentially significant growth and influence. However, Metaplanet's ambitious Bitcoin strategy is not without its challenges. The cryptocurrency's price has experienced a downward trend recently, falling from a high of $124,480.82 to approximately $108,046.79. This price volatility could subject the company's capital-raising efforts to increased scrutiny, especially if the market continues to be bearish or if the firm's aggressive purchasing strategy proves to be costly in a declining market. The success of the equity offering will likely depend on investor confidence in both Bitcoin's future and Metaplanet's strategic execution. That's all the deep dives for today, but we've still got a quick recap of all the major stories and your call to action. Don't go anywhere. And that's a wrap on today's essential updates. We saw how tokenized mining is attracting big players during Bitcoin dips. We analyzed Bitcoin's golden cross and its potential to spark a massive rally. We laughed along with the internet, reacting to El Salvador's quantum-safe Bitcoin strategy. And we explored Metaplanet's huge bet on Bitcoin's future, backed by a prominent family. If you found this info valuable, smash that like button, subscribe for more, hit the notification bell, tell us your thoughts in the comments, and follow us on all our social channels for real-time updates. We'll see you in the next one.